but the list goes on and on. Touching on tattoos, while she does coke in the bathroom, while the band plays in the back room, trying to take her out the venue. She's somebody that don't need nobody, she's just stuck in my head. Lives of satisfaction, I can't get no reaction, she's just stuck in my head. She's somebody that don't need nobody, she's still stuck in my head. Lives of satisfaction, I can't get no reaction, she's still stuck in my head. I want a conversation, but her body's moving all night long. I should tell her what I'm thinking, but those hips
Test.
she's looking like she doesn't even see me. How do I get this girl's attention? Stage lights are so bright and flashing. Think my ego is falling and I'm crashing. She's somebody that don't need nobody, she's still stuck in my head. Lives of satisfaction, I can't get no reaction, she's still stuck in my head. Touching on her tattoos, while she does coke in the bathroom. She's somebody that don't need somebody, that don't need nobody, that don't need somebody. Somebody needs somebody, don't need nobody but her. I'm nobody without her. I woke up today feeling like royalty. The sky is dripping gold and wrapping around me. Life can be so wonderful, warm and gentle light. Nothing's gonna bring me down, I'm feeling so divine. Life can be so wonderful, warm and gentle light. Nothing's gonna bring me down, I'm feeling so divine.
Feeling divine, I'm feeling the vibes. I feel like it's more than just a feeling, what we could define. Let's break through the ceiling, see what limits that we could defy. Cause I could do anything I want, it's for me to decide. Bring you up to speed, take the wheel, let you drive. It's alright on a dark road, let the fire in us be the light. Day and night, yeah, we only seem to free our mind at night. That's just life, that's just how we pay the price.
I woke up today feeling like royalty. The sky is dripping gold and wrapping around me. Life can be so wonderful, warm and gentle light. Nothing's gonna bring me down, I'm feeling so divine.
Hey, yeah, y'all will never bring me down. Y'all will never bring me down. I feel like a king right now. I feel like a king right now. I zone out when it get too loud, but I'm still locked in, getting lost and found. Y'all will never bring me down. I feel like a king right now.
Go on and take my eyes, you're all I can see.
I did not vet this music before I went live. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Rod on the internet and Matthew in real life. And today we're going to talk about Trump buying Bitcoin miners, specifically ASICs, and if that can have an impact on the price of Bitcoin. We have October in the pipeline, and typically in the past, October has been a very good month for Bitcoin and cryptocurrency in general. So, you know, we do have this last big push based off of the, traditional halving cycle for Bitcoin and how high can it really go. We're also going to be talking about some plans from Bitmain, as well as the new SEC chair, or Trump's SEC chair, mobilizing to update their custody and guidance, as well as obviously making an announcement here recently about stealing everybody's Bitcoin that they've already confiscated. We have a big issue with Monero and Qubic as well that needs to be addressed. Essentially an intentional 51% attack as a test on the Monero blockchain coming from another cryptocurrency project called Qubic. And we'll talk a little bit about, what a 51% attack is, etc., and how it impacts everybody in this particular case and what you can do about it and kind of what the status of it is right now. I do have a video from Rabid Mining as well we can take a look at to see what he's thinking about it. We're also going to be talking about some new hardware information that's pretty cool. Intel has released effectively a new variable graphics memory option, which allows you to utilize the iGPU's fraction of your system memory for AI workloads, or for really probably any workloads. But this is effectively going to increase your video memory capacity without having to necessarily upgrade your graphics card, which is pretty neat. And then AMD is discontinuing probably one of their better processors. If you guys recall, they already discontinued effectively the 5800X, and they are going to be getting rid of the 5700X 3D as well. Sorry, 5800X 3D, which is, disappointing, but it is probably eating into people purchasing their new processor. So if you want to get one at a reasonable price, you're running out of time to do so. We have some reactions to do, including one over the $94 million smart meter surveillance scheme that's going on, as well as the population apocalypse beginning, according to some right-leaning news outlets. Now, let's go ahead and pop into the first topic for today. Yes, everything is sort of working. Almost. The camera is really big. Let me make it smaller. And we'll just throw it down here. Boom. Bada bing, bada boom. We're good. I don't know. You guys tell me where you want it. It doesn't matter. The important part is that you see the expression on my face, so you can clip it, later on. Trump-backed American Bitcoin orders 16,000 Bitcoin or Bitmain ASICs amid the ongoing trade war. Why do they always do this with titles? It's like, we're going to add on this so we can get effectively some sort of algorithm bump, I guess. Anyways. American Bitcoin, a Bitcoin mining company backed by members of U.S. President Donald Trump's family, exercised an option to purchase up to 17,280 application-specific integrated circuits hardware for crypto mining from Bitmain earlier this month. The mining company purchased a fleet of 16,299 Antminer U3S21EXPH units from Bitmain, capable of 14 exahashes a second of computing power for about $314 million according to the Miner Mag. And this is, let's go ahead and get that original article up here so you guys can see that. I want to give credit to them since they're reporting on it. And Miner Mag is the one that originally reported on this, and they said that, covering the same things, they said after Hut 8 energized the Vega site in Texas, the flagship facility expected to host much of American Bitcoin Corp's incoming fleet. Its proprietary mining subsidiary has moved to execute nearly the full option under its miner procurement deal. Hut 8 disclosed in its Q2 earnings report that in August, BTC agreed to purchase 16,299 Antminer 21 EXPH units from Bitmain, totaling about 14 exahash a second for roughly 314 million US dollars. Home mining's dead. What are you going to do? Let's just be honest. The president's family has gotten into the deal. It feels almost impossible for a normal person to participate within mining, at least on Bitcoin side of things, unless you have the money to invest in this type of infrastructure. And individually, even at their level, it feels nearly impossible as well. You have to really have corporations, etc., getting in to be able to compete whatsoever. And after the video we watched last week, or a few weeks ago, I guess at this point, discussing, Marathon Digital strategies of effectively purchasing their own power generation with wind and so on. It's like, you can't just go based off of, consumer priced electricity, especially when they just keep hiking the prices. And that's kind of a theme. It's funny because the representation of society as a whole and our economy and where it's moving, where we're seeing this disparity between, the rich and the poor, as some would say it, depending on how left or right leaning you are. You might say related to the bourgeoisie and all that sort of stuff. But regardless, it is increasingly clear that across our economy, unless you already have capital and assets, it's very difficult to effectively purchase assets. And one of the great things about cryptocurrency and cryptocurrency mining in its infancy was it gave people a way to participate within asset building, right? And if you read books that are really popular, like Rich Dad, Poor Dad, that talks about, the value of good assets, and that's how you build wealth. In our particular economy in the United States, mining was a way to participate within that mindset, which worked very, very well for a lot of people, and came in at a price point that was affordable for most people, especially early on with the access to consumer grade products to mine, like CPUs, like GPUs. But as the capitalist market has taken over and does what it does, and it grows and grows and grows, and the industry grows as a whole, if you didn't keep up, it's very hard to get in now. So when I say mining is dead, I definitely mean more from the perspective of the home mining is dead. Mining is alive and well, and it's going to just grow exponentially, right? Because we're at the point now where we're dealing with economies of scale, and it's going to be impossible to really get in unless you're just a part of a startup or a part of a mining company. And that's why we had talked about for a long time getting into, technical repairs of ASIC miners, these types of things, if you want to participate within crypto mining in and of itself. Doesn't mean that there is no options or are no options for home miners. I think that speculative mining is still very viable. It has been utilized, unfortunately, most recently to, manipulate markets, to scam people, unfortunately. And this does put you in a weird position. That's why I think if you want to be successful within, especially home mining, it's very important to be project agnostic, meaning you don't align yourself 100% with ABC coin. You just mine, and you mine pre-market, and then you sell post-market, and you move on. And that seems to be the most viable way to effectively be profitable as a home miner and be able to compete, because a lot of these large companies aren't getting in. But the large valuable cryptocurrencies that do show promise, and the few and far between, something like Caspa, for example, just because that's a really easy one to point out, once it does become viable and other large companies recognize it, they get in on the piece of the pie, right? And then you have Marathon Digital hop in, and at that point, the home miners can't participate within that network anymore. And this is the cycle of life of proof of work cryptocurrencies. And unfortunately, I think it makes it very difficult to be successful. Hopefully, that'll change down the road, but this article does go on to say that the purchase forms part of a broader on-rack sales and purchase agreement with Bitmain Technologies Georgia Limited, covering up to 17,280 miners with 14.86 exahash a second for as much as $319.5 million US, excluding tariffs and other import charges. ABTC's August tranche. How do you pronounce this word, by the way? I need to actually learn how to pronounce it. Let's do it. This is part of me learning. Tranche. I said it right. Okay, whatever. We're good. I read it. We're golden. All right. Let's get back to it. Was funded by pledging 2,234 Bitcoin valued at mutually agreed fixed price alongside applying a $46 million deposit already paid. The pledged Bitcoin carries a 24-month redemption period. The remaining miners under the agreement must be acquired within 2 months via cash or additional Bitcoin pledges. The move comes just weeks after ABTC accelerated its Bitcoin accumulation program, buying roughly 1,726 Bitcoin between July 1st and August 6th for $205.6 million US at an average price of $119,120. Majority owned by Hut 8, the company now holds a significantly expanded Bitcoin reserve alongside its forthcoming hardware capacity. The transaction also reflects shifting dynamics in mining hardware sales. Bitmain has been working to scale up US-based manufacturing to mitigate tariff risks, a growing concern as U.S.-listed miners such as Iron and CleanSpark have received U.S. Customs and Border Protection invoices for import duties on rigs CBP claims are of Chinese origin. Both Iron and CleanSpark are contesting those claims, citing supplier documentation to the contrary. ABTC's merger prospectus with Griffin Digital noted that its $320 million Bitmain deal excludes any such potential charges. It remains to be seen whether Bitmain will supply US-made Antminers for ABTC's order, potentially drawing on previously reported imports of electronic components. Even with tariffs aside, institutional demand for large-scale hardware orders has slowed as Bitcoin's network hash rate growth plateaus, intensifying competition for sales. Earlier this month, Bitmain began marketing S21E hosted Hydro hash rate to retail buyers, a move underscoring the cooling pace of institutional purchases despite Bitcoin's ongoing bull run. Now, I think it's still up in the air how much of a bull run we're actually in. We've talked about price suppression due to the effect of miners on price basically going away. And I think that is very evident. We still have these timeline having euphoria phases available in both October and February of 2026. And depending on how those go, we could see extremely high prices. If we were going to base pricing off of previous all-time highs, we would be expecting at least over 200,000. But there's a lot of people discussing, at this point, a possible $400,000 Bitcoin by the end of the year. A new type of buyer who never sells is scooping up Bitcoin from longtime holders, a bullish catalyst for Bitcoin, says Bitcoin OG Udi Wertheimer in an exclusive Cointelegraph interview. In an exclusive interview with Cointelegraph, the commentator lays out a provocative thesis. Over the last 5 years, institutions have been quietly buying out old Bitcoin holders, and it's reshaping the market in a way few have appreciated. For the last 5 years, they've been buying out old Bitcoin holders, Udi explains, both kind of Bitcoin maxis, but also people who always had some portion of Bitcoin and have been selling it over time to get into Ethereum or Solana or whatever other altcoin. to add a little exposition there. Those new buyers aren't flippers, they're forced buyers. Udi points to Michael Saylor's strategy as the prime example. If Saylor stops buying Bitcoin for a sustained period of time, his company loses all of its value. He has to keep coming up with more new original ways to raise capital to buy Bitcoin. This, Udi says, is unprecedented. Bitcoin in the past had many instances of forced sellers. This is the first time that we have a forced buyer, structurally forced buyer who has to buy no matter what. The result, he argues, is that we are at the very tail end of old holders rotating out and heading towards a supply crunch that could ignite explosive moves. Wall Street bought all of our Bitcoin we didn't notice. Udi even floats a price target that sounds insane now, but might soon feel tame. I think 400K is conservative. From Ether's new treasury companies to the fragility of leveraged players, this exclusive Cointelegraph interview is packed with insights, and you guys can go watch the full conversation visiting the link down below. The question is, and I think the idea is correct, right? We haven't seen anything like this in full force quite yet. And by this, I mean effectively institutions getting involved in Bitcoin, purchasing up all the Bitcoin, and then holding it out of necessity to basically prop up the price of Bitcoin to maintain the value of their company. Now, to me, that sounds very scammy. And then that brings into question the entire use case of Bitcoin in the first place. There's been a narrative that got built around Bitcoin as a store of value, and this has been something that's been going around for quite some time, but that was never the original intent of Bitcoin. Bitcoin was meant to be utilized. And we are starting to see miners lose their influence over price, and that brings into question what is the intrinsic value of Bitcoin if there is no energy for the production of Bitcoin. In the past, people would say effectively that the cost of energy for the fees is what you would derive the value of Bitcoin from, and the intrinsic value comes from the actual energy cost to produce the Bitcoin and to effectively transact with the Bitcoin. But if you shift the narrative to a store of value for Bitcoin and you take away the necessity to transact on the blockchain, the intrinsic value therefore decreases. And so we're left with a question of, if it's just a store of value and you are forced to purchase it to basically manipulate the price to go up, then is it anything more than a Ponzi scheme? That's a question I'll let you guys answer in the comment section in the live chat, but I think it's worth bringing up. As far as a $400,000 price point for Bitcoin by the end of the year, I think that would be pretty far-fetched, seeing that miners no longer have as much influence over the price as they normally have, and that the institutional buying is being done over the counter and not necessarily on the chain itself. And it's basically paper trading. You have no forced buying from your traditional centralized exchanges, and you don't really have any viable DeFi for Bitcoin at this point, at least in my humble opinion. So you have nothing impacting the actual supply of Bitcoin itself, because it's just trading hands between people that already have a lot of Bitcoin. And that means that it's just a good old boy club. And then we have to once again bring into question whether the entire premise of Bitcoin replacing fiat was ever or will ever come into fruition. And I'm not necessarily sure that it will. That doesn't mean that it doesn't serve a purpose. And we can talk about the Trojan horse narratives that I've spoken about previously. One being originally was the Trojan horses. You get a bunch of people to invest in a limited supply currency, and the people that are already invested, their ships rise with that tide, and you effectively decrease the income inequality gap because you aren't able to manipulate it like you were able to manipulate fiat. And so you get people buying in, thereby increasing the net worth of individuals that were already purchasing, and you can't manipulate it back down by filtering it into other assets. Unfortunately, Bitcoin has just turned into another asset. So I present the second potential of the Trojan horse theory here that I have been working on myself, and I think is kind of interesting, in that the Trojan horse is not to replace the fiat system, but to build a system that loses its intrinsic value over time and leaves the rich, greedy people with the bag. By that, I would mean you would have a meteoric rise for the price of Bitcoin as the supply decreases. And then once all of the supply is eaten up and nobody's utilizing it to purchase anything, and there is effectively no intrinsic value from the energy cost to produce or maintain the network, then nobody has a reason to participate within the network anymore. And you thereby once again decrease the income inequality gap by removing a bunch of the asset wealth from effectively these big, large corporations like Strategy, etc. And that's a really interesting one. It's not a very positive one for crypto, but either way, you almost solve the same problem and you kind of move forward, right? And then other projects can come into place. Blockchain in general isn't cryptocurrency. Blockchain isn't just going to be Bitcoin either. There are other use cases. And if we're talking about the technology, that's separate, right? So I would still say, regardless of which Trojan horse narrative we end up going down, we will always have a piece of blockchain within our society, I think, from here on out for tracking and all of this sort of stuff. It's just an interesting thought that I have. I think, but if we want to really talk about 400,000, like I said, I think based off previous cycles, the highest it can go is 200. I could be completely wrong on that. We are seeing a complete shift in the way Bitcoin is both mined and utilized. And I think because of that, we are in a position of unknown. I think we maybe have 1 or 2 more 4-year halving cycles before miners have completely no influence over the price. And I think a futuristic indicator of this, or a foretelling of what will happen to Bitcoin in the future, we'll be able to luckily see with accelerated blockchains like Caspa, for example. And as that runs out of its block reward, we'll have to see how the market reacts to it. And then that will give us a pretty good indicator, I think, of how Bitcoin will react as we run out of that block reward. Now, the good news for Bitcoin and why I think we will be going higher, like I said, in October, probably through February, sometime around there, it's still following that halving cycle. So as much as we say this halving cycle is different, it is different in many ways. And that's because of institutional buying, the lessening effect of Bitcoin miners on the price, and all of that. Even with all of that said, as far as a macro level halving cycle, we're still seeing, similar behavior from Bitcoin. We're coming up on October. We're coming up on that time where we start to see in the past those euphoric phases. And if you can see here, Bitcoin's 200-day moving average has officially broken 100K. This is really, really big. It means that the average price of Bitcoin for the past 200 days has been over $100,000, which says that we've probably created a new bottom here, which means it's kind of like that whole traders will be like only up and that sort of stuff from here. And that is definitely a very strong potential, albeit, be cautious. It's not trading advice or anything like that. It's just analysis of what's been going on with the market. And because we're at this point, because we're coming up on October, because the institutional buyers and retail buyers are going to be seeing this performance from Bitcoin, it might influence a large influx of capital into Bitcoin over the next 6 months, right? And that's kind of what I'm looking at as far as like, okay, good. We are on that path. What's the top? nobody will ever know. I think it's still better to base it still, if you're looking at halving cycles, to base it off of time over price. And that's because, there's too many factors for an exact price, especially now that miners have such a low level of influence over the price of Bitcoin. I think it would be very bad for you to say, well, because Bitcoin went up X and X over the past halving cycles, I'm going to sell at 210,000, right? Like, that's not going to be a way to play this game. It's going to be, from the halving cycle perspective, you always sell on like your timeline. The hard part is, and I think people are aware of the timeline now, and this is something to talk about as a whole, is that the thing that's impacting this cycle the most is the ubiquitous knowledge of that the industry has of the behavior of Bitcoin over the halving cycle, meaning everybody's aware of the halving cycle and the timing of it. Before now, we've typically already seen prices go higher, right, to that $200,000 mark that would have been predicted, for this cycle, and one that I was holding on to as well. Because everybody's aware of it, it's impossible for it to really take place. And the real winners are selling, like I said, based off of time, and they're looking at this and kind of judging, relatively where their profit margins are. Now, the question will be, how much of an influence does MicroStrategies need, for example, to purchase and keep the value of their company up? And I should start calling them strategy. Yes, I get that. But how much of that will influence the price to go even higher? And how much will that eat up long-term holders and all of that, right? Or will the long-term holders still continue to hold? I think like the people that are aware of the halving cycle have been holding on to the Bitcoin for October through February of this year, right? Through February of 2026. And they might start selling off enough to counteract the institutional influence over the price, because they'll be based off of time, and that is something that could be being done. Now, on the kind of current year and running up to this point, I think the traders have been trading against the halving knowledge, right? So the traders are using the anticipation of the holders on the price going up to effectively make money off of the trades. And that's why you see the price suppression, because they can basically predict the behavior of the individuals that are aware of the halving. And that's kind of like a top-down perspective on like what's happening with the price of Bitcoin, why it's not behaving necessarily exactly the same as it had previous cycles, but still on that general pattern, right? And I think it's really interesting to see a Bitcoin kind of come into fruition. It's unfortunate that it's coming into fruition as a store of value as opposed to a currency, in my humble opinion. It's not the direction I would ultimately like to see blockchain as a whole go in, because maybe I bought into that narrative of replacing fiat too heavily. And as we know in the past, anybody that tries to replace fiat, well, they mysteriously disappear. So what can you do? Well, you can change the narrative to a store of value, the powers that be, right? And treat it as such, and then expect that the influence that you have over everybody else will be to treat it as such. I think that's why you see articles from BlackRock. I think that's why you see, the Trump family investing in it as they are. It's, if we do this, the public will follow treating it like that, and the public would have to treat it differently. But it becomes difficult when it gets thwarted by the fact that you have a group of people that will never sell it, right? So that, and buy large chunks of it. And this happens with every asset, right? Like it happens with milk, it happens with eggs, it happens with toilet paper, right? And I think it's proven to not be, at least up to this point, Bitcoin seems to have proven not to be a replacement for fiat. But that may be the general narrative that's getting pushed, and that's why I have that perspective. There we go. Articulated that. And welcome to the chat, John. Good to see you here, by the way. Now, I was going to read an article from Bloomberg, but they do that dumb subscribe stuff, and they want me to pay $1.99. So we're going to skip that one today, and we're going to move on to the Trump SEC chair and what they are moving forward with, of course, in regards to crypto. Now, this is going to be Paul Atkins, and he appeared on Mornings with Maria to discuss his recently announced project crypto. Who here watches these daytime talk shows anymore? I never even heard of Mornings with Maria. I mean, like, does anybody but boomers watch this crap? I have no idea. I'm going to say no. And if you want to get your message out there, for goodness sake, like, adapt to the changing society and go on like a podcast. Then I would hear about it. I'm never going to hear about Mornings with Maria. I don't know. At least maybe some moms are hearing about Bitcoin or something that are, I don't know, cleaning or whatever. But the U.S. Securities and Exchange Commission is looking at custody rules for digital assets, including how broker deals, asset managers, and investment advisors can deal with cryptocurrency transactions, its head said Friday. SEC chair, that's really hard to say, Paul Atkins, speaking about his recently announced Project Crypto on Fox Business Mornings with Maria program. You see, nobody watches Fox anymore, or MSNBC or CNN, said the agency was mobilizing at the SEC all our different divisions and offices to implement President Donald Trump's crypto working group's recommendations to make the U.S. a more crypto-friendly nation. This includes adjusting rules that have been around for 90 years or so, he said. We don't want the crypto assets to be on some flash drive in somebody's drawer, he said on Friday. That's exactly how I want it to be. When you believe people, guys, this is an intentional narrative and propaganda to convince you to give up self-custody. These get snuck in here, and it's like, we're going to be positive on crypto. But what we're going to do is we're going to input these messages that separate the public from self-custody. And you should be very aware that that's what's going on. And when you hear people talking about it in public and they're like, I hold it on, Coinbase or crypto.com, you should be like, no, real freedom is self-custody. He says that they need to be in a secure place. What do they always do when they push this narrative? They push the narrative that you are not safe. They use fear. And especially Fox News uses a lot of fear. By the way, I found something out really, really interesting as far as biblical translations and the participation of Murdoch, which I think is very interesting, over the translation of the NIV Bible. And I do think that Fox pushes fear specifically, and I think that they've been doing it since the 60s, maybe even before that. But they will use this fear to influence you to give up your rights. That's what's done every single time throughout history, and that's what they're doing with crypto right here. Oh, it's not secure if you hold it in your bedside drawer. They need to be in a secure place. The reason for doing all this and addressing these various regulations is to provide some certainty for people. You know what I have certainty in? My gun safe and my own keys in that safe. I don't have any trust in any of these centralized entities to hold my crypto. In fact, it would be insane for me to think that I should give up custody of my cryptocurrency, given the track record of American banks at all. at all. Do we have to bring up every single time the banking system in the United States has screwed over the American public and gotten bailed out by our government? No, I don't get bailed out like you rich assholes. I don't get bailed out when you fucking empty my bank account. No way you're touching my crypto. The SEC's work will be based on the legislation passed by Congress, he said, pointing to the already signed Genius Act and existing market structure legislative efforts. Quote, our goal is to get clarity and certainty, he said. It will be underbridged by whatever comes out of Congress, but I believe that we have authority to move forward in these areas and provide certainty and clarity for people. Asked about district court ruling on debit card interchange fees, Atkins said it could support real-time or instant payment networks, and moving toward instant payment settlements would be ideal, he said. This type of payment could be bolstered by using blockchain, and though he did also say that the system could need to have some sort of delay built in to address mistakes. Quote, the longer that it takes to have clearance on some of the transactions, the more risk there is in the system of something going wrong, some black swan event. Now, obviously, once again, utilizing fear here. Now, people make mistakes in these crypto transactions all the time. And unfortunately, I always say this. It's like, it's Spider-Man. Like, the saying is so true, but like with great power comes great responsibility. With freedom comes risk. These are the principles around cryptocurrency and what used to be the things that the United States stood for, the United States of America, that is, which is an individual has the ability to drive and aim his own life in the direction he wants, and he can take that risk and either suffer the consequences or the reward therein. And the entire government's propaganda, whether it be the right or the left, because clearly this comes from the right now, is to protect the people. Well, whenever they go down that path, they take away some right, whether it be the Patriot Act or whatever it may be. These are the things that they utilize to put fear into people. And that's what I wanted to talk about too. I was looking up this is just a funny side note, but I was looking up the amount of times different translations of the Bible say do not fear. And in the King James Version, it says it a bunch, right? Like, I think it was like 400 times. Maybe I should make a whole dedicated video on this because it's really interesting. The version that says it the least amount of times is the NIV, the New International Version, right? And that one was popularized, within the United States pretty heavily. It was easier to read. They made a lot of, what has been noted as took a lot of liberty with the translation in general. But what gets more interesting is when you look at the foundations behind the NIV Bible. And what I found that was really interesting is that one of the larger foundations that was supporting the translation and distribution of the NIV was the Murdoch Group, which is also going to be related to Fox News, etc. And I thought it at least ironic, right? Correlation is not causation, but I found it ironic that the news network that wants to convince you to go to war with everyone and puts fear into you is also behind the translation of the Bible that removes the most amount of times it says do not fear. Anyways, a little side note there. Everything's not always what it seems, but you also can go down too many rabbit holes, and sometimes I do that, and I get interested in, of course, some conspiracy theories, but that's my latest conspiracy theory I've been having fun with. Now, the Scott Bessent, the Treasury Secretary, also had a comment on Bitcoin. And of course, they're just going to confiscate all the Bitcoin they're going to put all the confiscated Bitcoin that they have into the Bitcoin strategic reserve that President Trump has established back in March. In addition, the Treasury is committed to exploring budget neutral pathways, just code for ways we can take Bitcoin from other people and not actually purchase it, to expand the reserve and to execute on the president's promise to make the United States the Bitcoin superpower of the world. To me, I'm just saying, I kind of like my second Trojan horse plan here, which is collapse the net worth of these people in the government and just take away all the intrinsic value of Bitcoin and end it. Like, what are we going to do if, we're in a position where, it is only governments and corporations own Bitcoin? What the is the point of Bitcoin? Well, honestly, what is the point of it at that juncture, right? Now I have to buy all my Bitcoin from Strategy and the Federal Reserve. Are they going to put in some sort of regulation that forces me to use Bitcoin to transact with? Where is the freedom in that? Where? I don't know, guys. It seems dark and it seems to be going down the wrong path. And I know I've been harping on that for a while, but there's just a lot of bad news in crypto lately. And we thought it was going to go down a different path, and it's not going down that path. And it would be amiss to not acknowledge that it's not going down that path. That doesn't mean you throw out, what is the term? Throw out the baby with the bathwater. It just means that you're aware of it and you speak out against these types of behaviors. You educate people on self-custody, and that's going to have to happen at grassroots level, right? Just like the housing market and how it's been manipulated by large corporations buying up all the real estate. People aren't even living in these houses. And they're artificially inflating the housing market because they're so greedy, they have to buy it all up. And they're going to do the same thing with Bitcoin. And that's what they're doing right now. That's what they're doing exactly right now. Let's talk Monero. If you guys aren't aware, Monero is a privacy cryptocurrency that is CPU mineable. And everybody takes their hats off to it, even if it's a Varus hat. And they, say, hey, it's maintained this privacy. There's been conspiracy theories surrounding Monero, whether or not it was developed by the CIA or whatever it might be. And you can go down those conspiracy rabbit holes. Suffice to say, Monero is extremely decentralized. It is available for consumer grade processors or consumer grade products that anybody can purchase. It is private, so nobody can see your transactions, which is unique for a cryptocurrency. And it's been around for a very long time. But maybe it won't be around forever, because there is a project that has decided to utilize effectively Monero to demonstrate the prowess or the capabilities of their own network. It's kind of odd because we're going to show the potential for us to hurt another network to prop up the viability of our network, which is Qubic. Now, Qubic, for those of you not in the know, utilizes the same narrative that Flux cryptocurrency uses, which is going to be proof of useful work or useful proof of work. You can flip wherever you want to put the U, and you can try to trademark it or whatever you want to do. You can try to do all those things, but at the end of the day, kind of the same idea. Now, what a lot of proof of work or useful proof of work is effectively are virtual private servers on individual machines connected to a blockchain to basically transact and settle basically settle transactions, right? So the blockchain portion is just a way in which you settle transactions for somebody else hosting your compute power. Now, there is obviously the discussion of storage, and we haven't figured out really storage or persistent storage with these kind of setups, because the workloads, if you guys are familiar with virtualization, for example, your data for the VM is in one place and your compute is in another, and you can typically move compute very, very easily, but moving data takes time because we still have within technology very high limits or still have limits on bandwidth, right? Which means the amount of data you can move from one place to another. So compute's easy to move, data is hard to move. Useful proof of work hasn't really solved that problem necessarily, but hopefully in the future we'll come to some realization or some discovery that can solve some of that, and I think it'll be big, when that happens. Right now, if you are running like data centers or workloads with large databases, etc., you typically have backups, so you have syncing hard drives, etc., to that have the same data in both locations, and then that's how you effectively do what is called failing over to one. You can move the compute over, and the data has replicated, is what they call it, across those hard drives. There's usually large storage arrays, etc. There's a lot that goes into it, but effectively that's what it does. It replicates it. That's how you're able to do that, but that has to be in a centralized manner. And then there's all the other problems. If you're running compute workloads with storage and sensitive data on a blockchain service that does something like this, then you're tapping into their data. Now, what you can do in use of proof of work is you can say client hosts the data, you can connect to here to process. This wasn't something that was really even in the past. It was viable, but not really worth it, right? Because you didn't need a ton of compute to process your data in traditional database lookup systems or whatever. But now with AI, it is extremely useful to have compute separate, more compute available in the economy for you to access to process the data with because of AI. So now use of proof of work on the blockchain kind of has its target, right? It has its use case, which is, hey, you got a bunch of data, you want to build this model out or whatever, you can utilize or rent from us through the blockchain, and then you can, build that model or whatever. Now, has anything really come into fruition that's a game changer? Have people been going down this path? Not necessarily. Any large AI project or company has been building out their own data centers. We have a few more coming into Abilene, or we have one more coming into Abilene and a few more coming into Texas. In general, it's kind of taking over the mining boom that happened. AI data centers are now kind of taking that over, and they kind of keep it all in-house, whether that be for sensitive data, etc. It's really up in the air, but this could take the place for a version of what DigitalOcean does compared to AWS, right? There are these kind of sections in which these blockchain projects that do this useful proof of work can move into. So that's use of proof of work, I guess, and a whole bunch of exposition on it, and kind of how I'm looking at it and where the opportunities are. Like I said, I think is there, but not widely utilized by any means at this time. So what ends up happening with, say, the DigitalOcean competitor version of AI processing. So an easy example would be you have like DigitalOcean versus like Amazon, Google, Microsoft, right? in that world, right? For virtual private servers. On the AI side, you effectively have the most popular one I think that was used a lot was like Vast AI. And I've talked about this before, but what you started to find, at least early on, and it's starting to change a little bit, was that Vast AI was still being leveraged to mine cryptocurrency. Now you take a look at an option like Salad, for example, and it does the same thing. It leverages mining cryptocurrency in the downtime to balance out the profitability for providing your equipment to that entity, right? Whether it be Salad or if Vast, you might mine on it to then, supplement your rental to make a little bit of extra money. And crypto has been this supplemental income for these projects. Now, initially, this announcement came a while ago, but Qubic was doing the use of proof of work, but also processing their own token. And then you were getting these jobs, and these jobs were supposedly, proof of useful work jobs. And you did those jobs and you got paid out for the job and all this sort of stuff, right? So that's kind of how Qubic started. And then they moved into, well, we're going to do the same thing, right? We're going to open up dual mining effectively, which is not really what it is, but or merge mining or whatever term you want to put onto it. What it was when we're not doing the use of proof of work stuff, we are going to mine Monero, right? So you provide your equipment to us, you'll still get paid out in Qubic, but we'll be getting Monero. Now, the way they sold this to everybody was effectively that with the Monero they earn, they will buy Qubic and then burn it. Now, I don't know about you, but this sounds like a scam. And maybe I'm just paranoid at this point and all of that. But anytime you manipulate the quantity of the currency that you hold to influence the price, obviously we get into gray area. And so this was already kind of a red flag surrounding Qubic. But they decided to go even further with this Monero experiment. And this was on Epoch 172. And here's the recap. So what they decided to do was, here's the first part, right? So 50% now goes to Qubic coin buybacks and burns, 50% to boost miner incentives for more CPU hash rate. So they're taking some of the half of the profits, burning the Qubic so the price goes up like we were talking about. They're taking the other half and paying that back to the miners to get more miners onto their network, right? So just playing games here at the end of the day. Now, it says 33.5 billion Qubic has burned at an average rate of $2,280 per B, same given to computers, miners, and miners as rewards. And they had a 2.7 gigahash peak hash rate, reaching 50% of global Monero hash rate. Now, the goal here's the thing that's crazy. This is Qubic.org. Okay? This is Qubic.org. This is them specifically stating that their intention was to attempt a 51% attack on Monero. I want to say that again because when I read this, I see a tweet about it. There's no way you would intentionally do this. I mean, it's really good marketing, sure. But this is so toxic, like Tommy said, to the crypto community in general. There's that line, right? Where, you can, no such thing as bad press. And I think that's true to a certain extent, unless you're being malicious. And then I think once people see that you're being malicious, especially in the internet age, you see people drop it. I just don't know how this is even a thing, but they do go on to say that Qubic has 3 times the profitability of Monero due to their scammy token burning bullshit. And they want to attempt for a 51% attack on Monero, and that is continuing. So now it's not just they tried it in Epoch 172, they did a demonstration and then they quit. This is ongoing. They're currently trying to intentionally create a 51% attack. Now, they're saying they wouldn't actually do anything, but I don't believe them necessarily. And that's because of some of the ways that they talk about it, right? So if we go down, I believe it's here. As a part of implementing the base layer of outsourced computations, Qubic is testing its capabilities in a unique way by redirecting its vast compute resources to mine another coin, Monero. This is more than just about profitability. It's an economic demonstration to showcase Qubic's useful proof of work capabilities. In the initial weeks, Qubic alternated between spending 50% of its time mining Monero and 50% training its in-house AI Garth. This approach proved to be highly profitable, up to 3 times more than direct Monero mining, and attracted additional compute power to the network. The experiment escalated when the team explored the possibility of taking over the Monero protocol to alter its rules. They said it. Like, what? The goal was to ensure that only miners operating through Qubic would receive rewards. So this is what they wanted to do. They wanted to alter the rules of Monero to say you only get paid if you mine Monero through Qubic. That's how that reads to me. And I don't want Qubic because you're manipulating the hell out of the supply. So I know any developer that's ever gone down this path of burning and manipulating supply has always had their best interest in mind over the people mining it. Period. The Epoch peaked at 2.3 gigahash a second, representing 45% of Monero's total hash rate, which set the stage for the test. The first takeover test was scheduled for Saturday, August 2nd, 2025. Drawing from past marathons where the network fully diverted compute to Monero mining, Qubic established clear guidelines. Public announcements for every move, allowing Monero to prepare defenses, no surprise attacks. I guess this is them justifying it or saying, see, we're not being bad. This is weird. Display internal hash rates on Qubic dashboards, but remove stats from public sites like mining pool stats, which they haven't been able to do, by the way. But they want to get rid of this. They don't want Qubic being reported. So they want to obfuscate what they're doing as well. Which seems dirty to me in the first place. Start with a pure 51% dominance attempt, then shift to selfish mining requiring only 33 to 40% hash rate. Increase marathons to 3 per week during the experiment. So on August 1st, leading into the marathon, Qubic's hash rate steadily increased, consistent with prior patterns. Miners contributed up to 48% of Monero's total hash rate, inching toward the 50% threshold. As the marathon approached, Qubic's infrastructure faced a mild DDoS attack, impacting some nodes and reducing tick quality, though the network persisted. Monero's overall hash rate rose, possibly from the rented third-party power to resist the takeover. Now, this is another thing that's been popping up. People are renting out hash rate and pointing it at Qubic, and I think really, honestly, if you care about crypto, it would be best to, mine directly. I've always said rentals are bad. We've talked about these problems before. Rentals damage networks and can be used by malicious people. This one is crazy because this is incentivized malicious behavior. It's nuts, dude. The marathon began amid ongoing intermittent attacks. The team restored nodes, boosting hash rate, while Monero pools added counter power, escalating into an all-out battle between miners, operators, and technicians. On August 3rd, the marathon continued under the strongest DDoS attack yet, lasting hours. Core infrastructure held with the chain ticking and processing transactions, but peripherals like explorers and wallets saw outages. Hash rate dropped to as low as 25% as nodes disconnected. Notably, Qubic mining pools operate independently within their own security, which was rigorously tested. With attacks persisting, developers fortified nodes and services. Post-marathon, the network reverted to a 50-50 split between AI training and Monero mining, evident in rising hash rates, including a spike of 50% of Monero's total. On August 5th, the team weighted options, await more miners drawn by profitability to proceed to selfish mining. Opting for action, come from beyond, announced on Discord. So this signaled Monero to bolster defenses, and Monero reportedly countered by listing Qubic public node IPs on sites like abuseipdb.com, which come from beyond dismissed on X, saying, no guys, still not a viable countermeasure against hidden adversary, keep thinking. So it goes on to say that on August 6th, DDoS attacks persisted, targeting peripherals and computer nodes, and lead dev DCAT node on Discord. Quote, I asked for a quote yesterday about $500 per IP for 25 hours with SYN, flood, and reflection attacks, so roughly $20K per day to target all Qubic nodes and ecosystem. They've been DDoSing us for 7 days straight now, so about $140,000 US dollars. The decentralized system showed resilience. Some nodes held firm, and this is, I think honestly this is marketing, but I think that it is malicious, and I think that it is negative for the cryptocurrency community as a whole. I'm not exactly sure, other than marketing, right? Like we go back to no press is bad press. I'm not sure the incentive. Now in chat, we can see that Weekly Rant says, I don't mine for profit, I mine for cash flow. And this is in response to Pirate, who said miners don't care, they will mine whatever pays most that day. Now, that is partially true, or it used to be true. I don't think it's as much true anymore, primarily due to the fact that miners are mining a lot of speculative stuff. Miners are mining for future profitability. But if you damage Monero, you damage the entire crypto ecosystem as a whole, right? And I think, so another response to that was, normally that's the case. I hope that people wouldn't mine a project that is openly stating they would be doing something that would harm crypto as a whole, which is what I just noted. And it's short-sighted. So here's what I think. I think that what I want to say to everybody is, you do have a CPU sitting around your house. I think you should point it to a non-Qubic pool. For example, I think support XMR would be great, right? And I think you should let it run to support Monero. Monero is one of the last principal cryptocurrencies in existence. It's maintained availability to general consumers via CPU mining. It maintains privacy. It promotes self-custody, and it is transactional in the manner of which it has relatively low fees, relatively quick transactions, and it's been around for a long time, and it holds to those principles. So I think supporting Monero would be good. I think it would be net negative if Qubic took it over and then made it to where you had to mine Qubic or Monero through Qubic. I think a reason for them to do this, to be completely honest, and this is the conspiracy theory, so throw on your tinfoil hat, is that Qubic is not a privacy blockchain, which means if they can at least get the miners to be pointing to them, then you expose one link in the chain of a privacy chain, and you leverage control over that to remove any privacy that Monero might have. We've talked about Zephyr doing the merge mining before. This isn't necessarily the same because it's not. It comes down to intent, Snake. So the intent of Zephyr was not specifically stated to take over the network, right? And intent really is everything. Like if you go into a court of law, intent is what matters. And it has been specifically stated that their intent is to change the rules of Monero. And it was specifically stated that they want it to be to where nobody gets paid out Monero unless they're mining directly through Qubic. So once again, intent is everything. And we can be like, I'm sure there's like 30 people are like, Zephyr did the same thing. Don't you think they're bad too? No, the intent's completely different, right? And that's really what you need to counter those arguments with. It's such a common thing for people to kind of do. Well, it happens in politics all the time, right? It's like, well, Trump did this and Biden did the same thing, but Biden did this, well, Trump did the same thing. And it's like, let's make sure we understand the intent of all parties involved, and then we can pass judgment via that, right? Hey, what's up, Matt? Says, happy Saturday. Where do they get the money to pay the miners to do this? That's your question. Well, my understanding is half. So they're inflating the price of their coin. Right? So what's going on is that they are burning a bunch of their Qubic, which is, let's look at the price though, because that is a good point. How is this working if the price of Qubic isn't going up? Let's look at, so that's 1 year. I mean, since they start, when did this start, right? So that's Epoch 172. So August 7th when they wrote this. I think I read it was like July something through July 30th through August 6th. If we look at the price, right here's the 19th. The first big uptick is on the 21st. So yeah, as they're running this epoch, they're just selling off. They're burning and artificially increasing the price of Bitcoin, of Qubic, and then probably selling that Qubic off, which is what they said they were doing, to then incentivize miners to come over to their network. Eventually, they run out of money if they're not successful, right? So they're utilizing the rewards from the Monero to buy their own coin, which also causes their own coin to go up, and then burning that coin to cause the coin to go up even more. And they probably already have large holdings, right? So there probably needs to be a massive block explorer, deep dive on what the inflows and outflows are. But that is at least a portion of where they're getting all the money to do that. And yes, the plan B will be to dump, right? They're just manipulating the price of Qubic with what the actual valuable asset, which is Monero. And they're using that to manipulate the price of their own token at the end of the day. You're basically mining Monero for them to fuck you over. That's what you're doing. Eventually it can't last forever. Right? Because if you're a miner, so let's just say all the miners mine for profit only. And so they all mine Qubic, but they're fully aware of what Qubic's doing. So to not lose out, they're going to sell every day, right? So they're going to sell their Qubic every day. The chain can only maintain that for so long. And so it doesn't, it's not sustainable is what I'm saying, right? And the only reason it's sustainable is if they can burn half of the Qubic that they're paying out, that they're earning, right? So which is what they're doing. And I bet if they rerun the math, they might change those percentages too. They might start burning 80% and paying 20% out to the miners, right? And that probably depends on what's going on with all that stuff. If we look at Monero here, this one's a little longer. So July 30th. This is interesting too, because you see that they have been mining majority of the Monero, and it has been having a negative impact on the price of Monero since the 30th of July. So they really are dumping the Monero that you're mining for them right away. And then the other question is, why pick a privacy chain to do this? Oh, the fun argument. So Snake brings up that XMR screwed up staying ASIC resistant. Well, what's the X5? See, I heard this argument briefly, and it just isn't true, because you can still rent SHA-256. If Qubic decided to do this with Bitcoin, and Bitcoin all of a sudden became 3x more profitable to mine, you're going to tell me you don't think that 50% of the large ASIC miners wouldn't move over? That's just stupid. Of course they're going to move over. Type of hardware has no impact. You can rent SHA-256 on NiceHash right now. Plus, there's the X5. So I don't think that it has any impact. I think this happens regardless of algorithm. That's me. Now, what do you mean they couldn't afford it? The price would go up, or they'd be making more revenue. If this exact scenario was on Bitcoin, we would still be talking about the exact same thing. I don't see how it would affect it at all. In fact, the availability, how much can you rent right now? Yeah, I'm not buying that if it was ASICs, it would be different at all. Who couldn't afford it? They're not doing it. They're influencing people by incentivizing them with money. Right? So the hash power isn't rented, and the majority of the hash power used to do this isn't being rented or done by the project itself. It's literally being done by incentivizing people with 3x profit, which is what they're advertising, over mining Monero directly. If you incentivized Marathon Digital to make 3 times the profit, or all of the big ASIC miners, if you incentivize them with 3 times the amount of revenue, they would all move over. The hardware doesn't matter. Anyways, I would be curious to see how much of the rentals are impacting this, or how much of it is rentals versus farms. Now, the thing about CPU mining that I've always said is a problem is botnets have a large amount of control over it. And it's very easy to steal CPU hash power, whether it be through browser hijacking or cryptojacking on idle data centers, all that sort of stuff. A lot of that goes on, right? With CPU mining in particular. And I think that, like, when we talk about different types of hardware, that's an issue that CPU mining has that's unique to CPU mining. So the percentage of the pie that is cryptojacking versus rental versus direct mining would be interesting, or farm mining, right? Son of a Tech, they're not understanding that they are not paying directly for the hash rate, but giving more rewards than everybody else for the same job. Correct. That's what they're doing. So the hardware, it's hardware agnostic. This attack is hardware agnostic because it comes down to incentives. I always say, like, if you want to fix the world, you have to fix the incentives, right? And this is an example of incentivizing in a negative manner. And that is basically all they're doing. IoT says, indeed, those of us deep into CPU mining all know when we see a certain person join a Discord, the Chinese botnet is about to join. That is true. I think that's going to wrap it up, though. I mean, if you guys want details on a 51% attack, I've done videos over it in particular. Just a brief overview, that means over 50% of the network hash rates coming from a single entity. That is what they're attempting. And the power that they're using, or the thing that they're going to use that power for, is they can reverse transactions, block transactions, monopolize mining rewards, and rewrite the blockchain history. In their particular case, they want to block all transactions that are mined from anybody that's not mining through Qubic. That's their goal in particular. So that's what a 51% attack allows you to do, and that's what they are trying to do. I think it has to be sustained. Which is why, so for them to be fully successful, obviously 51% attacks have happened before. Some have resulted in forks, and it really depends. I think it's fair to say that it is unlikely, but that's also why their strategy is sustained rewards, right? And so that's why they're structuring it as such, is because of the sustained rewards. Now, I don't know what their income split between the Monero mining itself and the training of their AI. It sounds like it's training an in-house AI. So where those funds come from to pay the miners for, I don't know. To Matt from Viper's point there is, potentially 50% or more of the reward that's kind of coming out of thin air, right? unless they are making it all up. If I looked at this before, it's been a while, but not wallet. I want I'd have to deep dive this later. I guess I shouldn't do it now. There's GitHub. Do they have, I was just looking for a block explorer. Because it'd be kind of curious to see. No. Oh, they're trying not to get DDoSed. There's a lot of big wallets. We need to pull this and run run it so we can get some graphs. Trade ogre. Oh. So people were asking me about Trade Ogre. I don't have any news on that, guys. When I find out, I'll let you know. Snake says nobody holds XMR. It's a hot potato. Well, that kind of makes it the only cryptocurrency that's been successful to be a currency. Right? At the end of the day, fair enough. At least in my opinion. So Monero did post, I think that's today, right? August 16th, that fire up your miners to support the Monero network and enhance its security. This is the only thing that I saw from them that was talking about it at all. Seems like everybody involved is kind of tiptoeing around the subject, and whoever is in control of the Monero X account, and whenever you talk about this, and I should do better about it too, we need to state that Qubic is doing this. The reason I'm firing up my Monero miners and pointing them to support XMR is because we have a malicious intentional attack from another blockchain project. Snake, you're wrong. You can keep saying that if XMR was ASIC, this would never happen. You're just factually wrong. The incentive is there. Marathon Digital on Bitcoin would swap over, or some other big one. Everybody would swap over to get the revenue. It's literally no different. It's no different at all, because it's incentive structure. It's hardware agnostic. It just is. Anyways, back to this. Looks like right now they're 35.5% of the known hash rate at Qubic.org. They're trying to get rid of this entry, or Qubic is. Support XMR is one that you can pop onto. Now that does have the most hash rate. You technically want to balance it out. The best would be to solo mine, and maybe you get lucky while you're solo mining. So that would be cool. The list is over on miningpoolstats.stream/Monero. Let's talk about hardware. So this one's really cool. If you guys are into AI or really just into compute at all, or utilizing more video memory, Intel, the Core Ultra systems gain GPU memory by a sharing override feature. So Intel wants to stay competitive in delivering the latest AI features, and local LLM hosting has become a hot topic recently. The latest APUs from Intel and AMD are not only equipped with CPU and GPU cores, but also NPUs. These NPUs can run basic models on their own, but the best performance still achieved through the graphics subsystem. AMD introduced a new feature called variable graphics memory, which allows users to increase the amount of system memory shared with the graphics processor. Users can adjust the size of this memory pool within the limits set by, AMD. And the VGM feature was primarily demonstrated as a gaming enhancement, especially when paired with AFMF, enabling higher performance in games. Gamers effectively, this is going to be for the game, from the gaming perspective, where this is going to help with is higher resolution textures. So you probably, like if you're playing on a 1080p screen, increasing the graphics memory, probably not going to be that big of a deal. But if you're playing on 4K, increasing the graphics memory is going to have a massive impact on performance. So just from the gaming perspective, that's probably what you're looking at, right? Gamers effectively gain more memory to store assets, and since the size and speed of system memory are often the main factors in integrated graphics performance, this can lead to measurable improvements. However, such features do not always yield performance gains. Games designed to use whatever memory is available may load larger textures, which can actually make some titles run slower, an effect demonstrated by The Verge. For users who are not into gaming but need more memory for other tasks, such as hosting LLMs, this feature allows them to host larger models and potentially offload them entirely to VRAM when enabled. Now, obviously, what's the big question here for mining? Because think about it, what's the biggest question here for mining? Can we use a 2 gigabyte GPU, give it another 2 to 4 gigabytes, and mine Ethereum Classic, for example? Can you use a lower end 6 gigabyte NVIDIA GPU, load that extra 2 gigabytes in, and all of a sudden start mining Conflux? This is super awesome. It's something I want to test. So it's something I'm trying to get back into making content again. Health is still kind of hitting me up, but this is like one of the things I definitely am excited to test. I want to see how this works. And just for fun, from a nerd perspective, can you load that larger DAG into this additional shared memory? So Bob Duffy confirmed that Intel now offers a similar capability called shared GPU memory override. Available on Core Ultra based systems, this technology is intended for integrated graphics solutions that lack dedicated memory rather than discrete GPUs. And this is where I think AMD's solution differs from Intel, because AMD, I believe, you can use along with your discrete. And so I'm definitely going to check it out. Right now, it's called variable graphics memory. I think the Intel one, but this is there's got to be a hack around this, even the Intel side, to provide that for things like loading additional DAGs. I think it'll be sick. But anyways, these are the new technologies. I think eventually, if we're being completely honest, like 100% honest, discrete GPUs for gaming are going to go away 100%. It's just not going to be around. I think that from the perspective of AI and stuff, that's where all the discrete GPUs will go. I think they are trying to push everyone towards APUs, all of that. A lot of the new technologies like any of your FSR, DLSS, XSS, XESS from Intel, all those things are really removing the need for discrete GPUs in gaming. And it's a little depressing. I think you'll still have the enthusiasts, but at the end of the day, I think they really are trying to push people away from that. And so a lot of these technologies are aiming towards that. How well will it work with LLMs? That's another question that I'll let somebody else answer, but I'd like to look into it for particularly loading larger DAGs into low-end GPUs, because I think that's the most interesting part, right? Now, AMD's really kind of turning into the new Intel, you know? I don't know if you guys remember back in the day, but I think it was like the Intel Core Duos. And they had a couple really, really good ones. And they came out with the next line. And so everybody stuck on the Core Duo because for gaming and all that, it just did perform better. And then they kind of discontinue it and that sort of thing. AMD did some really weird strategic things as of late. So they had their AM4. They were supposed to support it for X amount of years. And then they released AM5, but because it was coming out a little bit before the backwards compatibility and didn't have backwards compatibility with AM4, which they promised support for, they did go ahead and move forward with some upgrades on the AM4 side of things. We got some really good processors on the AM4 platform for both mining and for gaming. But for the gaming perspective, the thing that kind of took the world by storm was their X3D cache. And those X3D models, they released the Ryzen 7 5800 X3D back in 2022, and it quickly became the most popular CPU for gaming, I think, in the history of CPUs ever. And then they followed those releases up with the 5600 X3D and the 5700 X3D. And unfortunately, all of these product lines have eaten into their profitability on the AM5 platform. And as such, because the 5800 X3D was so popular, they began to kind of discontinue it and stop selling it in retail. So you still had the 5700 X3D available, and that really turned into the next most popular CPU to use in gaming, because you get cheap motherboards. You have a variety of different motherboards that can be utilized on. It's a great upgrade if you're already on AM4. It gives you an amazing amount of gaming performance. And from the perspective of like the average dude, typically you're building a computer for gaming. So obviously, if you look up the best CPU for gaming, it's in the top, and it's the cheapest in the top. Now, AMD is going to be getting rid of it, and they said that it's reached its end of life. And it's disappeared from retail. So if you guys haven't looked, the 5800 X3D is extremely expensive now. It's almost better advised to just, buy an AM5 motherboard and a 7800 X3D. But according to Dutch media, AMD has reportedly stopped offering its 8-core Ryzen 7 5700 X3D processor for gamers. This AM4 SKU was one of the 2 variants available with 8 Zen 3 cores and was part of the success of the 3D V-Cache program. The 8-core 5800 X3D released in 2022 and was an instant smash hit and became the best gaming CPU for the last gen platform. AMD eventually learned that the single SKU did not make sense given the demand, so they created the 5600 and the 5700, which was essentially a lower clocked variant. It is now possible to say that AMD has halted the production of AM4 based CPUs with 3D V-Cache. The 5600 X3D is exclusive to certain retailers, which I've never seen one in real life, by the way. And the 5700 X3D, which I've built a lot of systems with, by the way, is reportedly reaching end of life. And I'm going to be super disappointed because it's kind of been my go-to. Like if I have like a dad that's like, hey, what's going to be the best parts for it's like 5700 X3D, just grab it, a couple $100. It's going to be great for a long time. The 5700 X3D and 5800 were best sellers for AMD for a long time. And the 5800 X3D still serves as the best AM4 CPU, outperforming many modern mid-range CPUs for gaming. AMD never offered more than 8 cores for AM4 though. AMD now has effectively ended the AM4 X3D series, as stocks of the 5800 X3D and 5600 X3D are no longer found through normal retail chains. AMD has never communicated any plans to launch more X3D CPUs for the AM4 socket, and the time is to transfer into AM5. And the problem is, because I've had this discussion with a lot of people, and the Phenom with the 3 cores, you could unlock that 4th one. Was that before the Phenom? Yeah, it was before the Phenom. What was that one called again? It's been forever. Anyways, back to this. I really honestly think they're doing this because it's eating into the sales of the 7000 series, because if I play on a 7800X3D and I play on a 5800X3D, I'm going to be completely honest, I can't tell you which one I'm playing on. Like, even with DDR4, the 5800X3D really just smashes all other competition. And it was so much cheaper, so they had to get rid of it. And it's starting to feel a lot like Intel, where the CPU upgrades aren't really that much of an upgrade, and the only reason you have to buy them is because you don't have the access anymore at retail for the older CPUs, right? From a mining perspective, I think you don't need the 3D V-cache. We did do all the testing there. It doesn't really matter for mining. And because of that, and because of the amount of other, CPUs in the 5000 and AM4 in general that are good at mining, from a budget perspective, one of those used is going to be pretty easy to pick up. And then Matt says that Epic ROMs are still the best. The problem is the motherboard cost for mining. But yeah, so that's kind of where we're at as far as what they're doing. It's starting to feel very Intel-ish. And the fact is unfortunately the reason it's like that is because Intel's not competitive. Intel hasn't had a good processor since the 12900K, and arguably probably the 11900K. The 12900K was really just a little bit of an uptick. And then 13 on have so many issues from a voltage regulative perspective that it's not great. They're slower. They tried to make up with it with those special cores. They had the performance cores and then the economy cores, and those economy cores are kind of trash. It was interesting, but they're just falling behind, and I think that AMD is going to be able to behave like the leader, unfortunately, and I think this is just kind of showing that that's the direction they're headed in. We'll have to see what they do with AM6. We got AM3 and AM4 backwards compatibility. The reason AM5 was not is because the pins were swapped from let me see if I say this right, from the processor to the motherboard. And because of that, they're not backwards compatible. Now that they've swapped to the more modern sockets where the pins are in the sockets instead of the CPU, like Intel, which probably reduced their manufacturing costs, to be honest, is probably why they did it. Will AM6 be backwards compatible with AM5? And when we get to that point and they let us know if or not it is backwards compatible, is when we'll know if AMD has gone the way of Intel at their peak. What Intel started doing when they started going down is they started having backwards compatibility with previous chipsets on newer generation processors. And so we need equal competitiveness. Obviously, we need both companies to be competitive for us as consumers to win. And right now, I think what we're witnessing is just the passing of the torch of the king of CPUs to AMD. And once again, consumers will get screwed. And that just seems to be the way it's going. Matt does mention the DRAM situation on newer AMD processors is terrible. Yes, well, they've always had issues with memory in general, if that's what you're referencing. And I think, they tried to, so one part of the reason they had that problem was because XMP was exclusive to Intel, and obviously every processor is going to communicate different. Now they did resolve that by getting us the, Expo, right? EXPO. But yeah, I would never run AMD in quad channel. Like desktop lines on the server side, maybe that's a different deal because you're not really dealing with Expo. You're getting error correcting memory, that sort of stuff. but I would never run a desktop grade AMD CPU in quad channel. I have, and that's the reason I'll never do it. Quad channel does not work. You cannot get the timings in. They never match. It is the shittiest experience in the fucking world. And it did make me go back to my 12900K for another couple of years, right? Right now I'm on the 7950X, but I still have issues with my primary rig on the chipset side of things, chipset drivers. It drops PCI devices quite frequently, like capture cards, which obviously I use a crap ton of capture cards. I have 8 capture card ports on this main rig, and it's a crapshoot as to which card's working at the time, right? And it's so frustrating. Reboots change it. The boot times on AMD are awful. I have no idea why they're so bad. I think it's the memory training. So it goes back to that memory issue. They have a lot of issues still. And all Intel has to do is release something even remotely competitive and keep, that reliability for their chipset and the advantage they got from XMP. And they're back in the game. It doesn't take Intel. It's not like it was when Intel was in the lead, where like AMD had to do a lot to get back into the game. They had to fix their drivers. They had to come out with a competitive CPU. They had to fix their memory compatibility. Like AMD had a long way to go. Intel doesn't have that far to go, right? Their driver team's on point. Like I said, the advantage from XMP is good. Intel is in a position where they really just need to come out with a non-failing, generally competitive CPU, and they're back in the game. And cache, yeah. If they add more cache, probably. You're correct, yes. I still have, so this rig is a 9800X3D. That rig, this white one here, which is the girlfriend's, I put my 12900K in there. I got to be honest, her 12900K is just works a little bit more reliably, meaning like part of the reason she has it is because I know if I put like an AMD processor in there, I'd be effing with crap all the time, because I F with crap on this thing, I swear, all the time. There's like some weird thing and I need to go adjust a memory timing, or it just dies and doesn't come back from sleep. It's gotten a lot better with the latest BIOS patch. There was also, this had the ASRock motherboard in it. It was burning up the 9800X3Ds. So part of that's the third-party vendors. All right. Anyways, all the nerd stuff out of the way. How about we take a look at this? I've been watching this guy, Sam Bent, a lot. He's really good. I think you guys should go watch him. Tell him I sent you. He released this video 2 weeks ago now. And the title is the $94 million smart meter surveillance system. And why this is interesting to me, for those of you not in the know, I work for a power cooperative. And so obviously we do metering, and I kind of want to see what the perspective of like a CyberSec guy is on this particular scenario. Now, smart meters, the advertisements to that is going to be like obviously lowering your bill, because it can regulate the amount of energy coming in and out. A lot of power cooperatives and companies are advertising these, giving you discounts, on your power bills as well, at least from my understanding, because they can have more control over the power delivery to your home. I think from a mining perspective, it's important too. I think this is a little bit more tinfoil hat, but let's listen to him. I'm interested.
Sacramento's utility company fed cops detailed behavior.
Here we go.
Sacramento's utility company fed cops detailed behavior data without any court orders, consent, or any kind of suspicion. Sacramento Municipal Utilities District, or SMUD, transformed smart meters into government spy devices, transmitting citizens' every electronical impulse to law enforcement databases. Every 15 minutes or so,
This is
these
part of.
meters
So this
record-
is the thing that scares me too. Is there is a reality to this because there is the Palantir database system that they want to put in place for monitoring people, and I think we should push back against these types of things. And it's weird to live in a society where we talk about being capitalist all the time, and then all of our big corporations and our cooperatives and everything work directly with our overseers, right?
life patterns, basically. When people wake up, which appliances run, when showers happen, when homes sit empty even. SMUD handed this fairly intimate surveillance data to Sacramento PD and the Sheriff's County Office and 3 other departments without any kind of warrants. The threshold for suspicion dropped from 7,000 kilowatt hours per month in 2014 to just 2,800 hours by 2023. One SMUD analyst admitted that they personally used 3,500 kilowatts last month above their own suspicion threshold. Running air conditioning in Sacramento's brutal heat basically makes residents criminal suspects. Alfonso Nigan needed extra electricity for medical equipment due to his spinal injuries, and sheriff's deputies showed up twice demanding warrantless entry.
See, this is ridiculous to me too. Like the idea that we live in a so-called free society, and if I'm just running medical equipment, the damn cops are going to show up. Like that is a surveillance state and in borderline, what do they call it? Martial law, right? At the end of the day.
And threatened arrest when he refused. His actual crime was exercising his Fourth Amendment rights while using his electricity that he was paying for. Brian Decker got the militarization response. Deputies with guns drawn and bullhorns blaring, forcing him outside in his underwear while neighbors basically watched. And he was mining cryptocurrency. He was growing cannabis.
Dude, this is what mining cryptocurrency gets you, boys. In cuffs. Yeah, it's authoritarian. It's not communism. Communism is economy, primarily. Anyways.
While neighbors basically watched.
Thanks, Josh.
And he was mining cryptocurrency. He wasn't growing cannabis or anything, but SMUD's surveillance didn't distinguish between the legal and the illegal electricity use. California's Public Utility Code, Section 8380, explicitly prohibits utilities from actually sharing precise meter data without warrants or court orders or like customer consent. Now, SMUD violated this law daily for a decade, treating statutory protections as suggestions while claiming they're required to.
They all jacked his keys, and that's what's in the Bitcoin reserve now.
By law to share the data when they know they're not. The Sacramento Police Department made 90 requests over a 10-year period, each covering entire zip codes. In July 2023 alone, SMUD sent data on over 10,000 customers. After police filtering, analysts still had 4,800 locations to check for patterns on, finding only 4 homes with suspicious usage. Internal communications actually showed
this is
that
crazy,
they
dude.
lacked probable cause, but decided to continue anyway. And this is something that violates Article 1, Section 13 of the California Constitution, which protects against unreasonable searches. And searching entire zip codes without any individual suspicion represents exactly the general warrant our founding fathers actually prohibited. And the city leveraged this surveillance into a revenue machine, levying $94 million in fines in just 2 years under their cannabis ordinance. They monetized constitutional violations at $500 per plant over the 6-plant limit, turning privacy invasion into profit in a way. And the Supreme Court already ruled in Kylio versus United States that thermal imaging of homes requires warrants. That's with stuff like FLIR cameras. Now, Justice Scalia wrote that using technology, quote, not in general public
You know what's
use,
crazy to me?
end quote.
Like, it's insane that we would think this is okay just to look for marijuana growers. If it's not a violent crime, and then you're invading an entire population's privacy to catch someone doing something that's legal in the state. Like, what?
To explore home details that would be unknown.
And you know what it all comes down to, too? They just want to catch the people that they're not getting tax revenue from. So it all comes down to money. And meanwhile, they're peddling children for SA crimes. And then this is what they choose to prosecute. It's like, there's so many things that we're going in the wrong direction in, and I just don't get it. Especially when it's like, this is common sense. We're supposed to have the right to privacy. There's clear stipulations against search and seizure, and it's violating all of them. And it's doing it to catch people doing something that you voted to be legal in your state.
Without physical intrusion constitutes a search, which makes
sense. And the problem is like, that's what I said earlier. The problem is it's so clearly to generate more revenue for the state that it's just gross.
Smart meters provide far more invasive data and thermal imaging, for example.
And we almost had someone from this state be president, which is crazy too. Regardless of like what political affiliation, like, it's crazy that people think like this.
Example ever could. Thermal cameras showed heat patterns, and smart meters revealed daily routines, appliance usage, stuff like occupational consistency and occupancy patterns, and behavioral habits in, like 15-minute increments, basically. The Seventh Circuit ruled in Napersville smart meter awareness that the smart meter data collection constitutes a Fourth Amendment search. And the court found that energy consumption data reveals when people are home, when they're asleep, what appliances they use, which, is creating a detailed portrait of their private life by default. And SMUD claims that administrative purposes justify their surveillance. But administrative acts...
Yeah, that's been the argument for all of this stuff. A lot of the power companies and cooperatives will like incentivize you to use like smart thermostats already. That's been a thing. And, they can control your AC, so they can reduce, the amount of AC you're using in high load times. And there is an argument for it, but it definitely should be within the individual's right to accept or deny that based off of the incentives, right?
Definitely does not automatically grant lawful authority or allow them to become law enforcement's data broker at will. The Naperville court explicitly stated that law enforcement's access requires a warrant, even if administrative collection doesn't. So smart meters generate what the Naperville court called data at least as rich as thermal imaging. In Kylio, law enforcement can determine grow light usage with confidence, basically, much more confidence than thermal cameras can actually do, by analyzing consumption patterns.
Imagine you're like going, like your job is to go through the thermal imaging. Never mind. I had a dirty thought.
And stuff like timing. And SMUD's privacy policy really hides in the website footer with no real mechanism for consumers to refuse that surveillance. Citizens can't really opt out of this electricity service. making this forced participation
You know what's creepier too? He's not mentioning is these smart meters are all built in China.
in government surveillance infrastructure. And the evidence shows SMUD's proclivity to generate lists and tips for law enforcement rather than responding to actual specific investigations. They transformed from a utility provider into an active surveillance contractor mining their own customers' data for the police. And every smart meter that is actually installed is like a private government informant that documents that home's activities. And the data gets stored for years, creating behavioral profiles that law enforcement can then access with no judicial oversight. And other jurisdictions watch this case very closely, waiting, to try to implement similar surveillance partnerships if this whole SMUD thing actually prevails. Local utilities nationwide become the next government spy networks, turning infrastructure against citizens. The very bills you pay are being used against you. The October 2025 hearing will determine whether courts protect constitutional privacy or legitimize utility surveillance. And the precedent really affects every American with a smart meter. Essentially, everyone in urban and suburban areas will definitely be affected. SMUD pretends that their data sharing qualifies for this narrow statutory exemption, but like mass zip code searches do not meet any legal exception whatsoever. They claim law enforcement's request trigger mandatory compliance with ignoring the law's warrant requirements, which means it's not a request. Like, they're just giving them access to everything. Smart meters promise efficiency in grid management. Instead, they create what the EFF calls a dragnet surveillance grid. And it's one that you fund and you pay for. So, like, indiscriminate monitoring of the entire community without any suspicion or cause is completely unacceptable. And the city of Sacramento and the police department refuse to comment or, accept any responsibility. They hide behind litigation while continuing their surveillance, which is really just standard authoritarianism. You violate rights first and you litigate later. We started at 7,000 kilowatt hour monitoring for actual grow operations, which shouldn't even be a thing, really. It's your electricity, you pay for it. Who the hell is anyone to tell you how much you can have? This is nonsense. But then we moved, to like,
I think
more
it's
than
just,
half that.
what I think is really interesting is like, it does highlight this idea that like really everything it does come down to energy. Like, not from like that. I mean, even from that, but like that, not talking. It's funny how you have like the hippy dippy like people that are like everything is energy and blah blah, but like really everything is energy. You know what I'm saying? Like everything is effectively comes down to energy consumption in some form or fashion, and it is becoming, especially this day and age, it should be a protected right to be able to utilize as much energy as you want. And I've talked about this before too, like there are like direct correlations between how well a society, how much energy and how efficiently a society uses it and how economically well off they are, right? And I think it's kind of like this kind of highlights that, and I wonder if there should be some sort of like litigation or something or ruling or adjustment to government systems that say, hey, like you can't deny the access of energy to the public based off of suspicion, especially, right?
Drug enforcement becomes basically
and there shouldn't be, you should still have your right to privacy surrounding it as well.
Behavioral monitoring of law-abiding citizens. Deputies arrive with predetermined guilt, determining, warrantless entry based on an algorithmic flag. And when citizens exercise constitutional rights by refusing, which they're absolutely entitled to, they faced arrest threats and intimidation. Proving surveillance creates the presumption of criminality. Smart meters collect granular usage, revealing intimate details, basically, that the Supreme Court protects as a core Fourth Amendment issue.
Northern Prospector brings up a good point, which is lack of steady investment in nuclear regulatory. Death of nuclear power is killing the West right now. And I think you're correct. And that's another example of like, and I talked about, my conspiracy around the idea that, we live in a world where they utilize fear to manipulate. I think there is probably some sort of underlying incentive to not invest in nuclear because abundant energy and cheap energy puts more power into the hands of the people, right? And less energy and more control over the energy allows more control for any government that's in place, right? And so they utilize the fear of nuclear technology and they push that narrative to then kind of manipulate people into going along with it and giving up that potential of effectively abundant energy, right? And I do think that it comes down, like there's whether it is left or right. And like I said, like if you look at like, you can go back and rewind on the findings surrounding like the NIV and the interpretation removing over half of the entries of do not fear in the Bible. They want you to be afraid, right? Because that's the ultimate control. Is putting fear into the population is the ultimate control of the population. But if you also added, if you added abundant energy, that would remove a lot of the fear too, because a lot of it does come around to like having the access to that energy to live and take care of yourself and all that sort of stuff. So it's all kind of intertwined
in that territory. In the sanctuary of the home, the court ruled that all details are intimate details deserving protection. Smart analysts conduct painstaking analysis of customer accounts, profiling behavior through patterns from energy data. And
it is just gross that they're profiling people. It's just gross. I don't like this idea that there's just like, the thing is we're all humans. So it's just some dude like me looking at my like heat scans of what I'm doing in my house. Like that's crazy, man. Console says, worst place in Switzerland is where SVP Swiss Democrats have the saying. They don't even care about the written law. Whenever they want to collect money from you, they will, and all justice is illegal. I am not familiar with that Democrat Party or SVP or anything going on in Switzerland. I have to take your word for it. I do think that to a certain extent, both right and left are leveraged in conjunction to open the pathway for the other party to remove the rights of its citizens. So I would say, for example, you had the Republicans in the U.S. and I'd have to, I don't know, I'm not really well versed in world politics, right? But in the US, as an example, would be the use of the propaganda from Fox News and the fear pushed there and the 9/11 attacks to implement the Patriot Act. And then following that up, you have the Obama administration with its overreach, with the utilization of the power that was given to them from the Patriot Act that was enacted by the Republicans. So I think I am maybe a little bit more of a conspiracy theorist as far as I think that they work in tandem with each other to slowly obfuscate the removal of the freedoms of the citizens. That's what I think happens. And whether that is, I don't know if it is conscious from both sides. I wouldn't say that. I would say it is the nature in which humanity functions, unfortunately, in a lot of cases.
Become intelligence analysts rather than utility workers, mining data for government purposes. French regulators already sanctioned smart meter providers for collecting granular consumption data without valid consent. Europe recognizes to some degree the privacy invasion, while American utilities just plead ignorance, basically. And the lawsuit seeks
Yes, Todd, it did.
injunctions to actually stop smudge surveillance and prevent these local cops, not that like anyone else is warranted in doing it, but from actually requesting bulk data without warrants. It's a really simple demand. Like, follow the existing law. Respect the Constitution. The one you guys swore an oath to uphold and defend. Stop spying on customers, right? Like, smart meters enable...
What do you guys... He brings up the Constitution. I kind of have like... I heard this idea, and I'm still kicking this one around. I think it's really interesting, though, that we should follow the Constitution to the letter of the law, and we should abolish the Supreme Court because we don't need interpretation of the Constitution. What do you guys think about that idea? I thought it was interesting.
The thermal imaging attempted to do, peering into homes without that actual physical intrusion. And they could do it remotely, too. Technology completely changed, but the Fourth Amendment protections really do still remain. And, the government needs warrants to actually surveil homes. Property owners face like 6-figure fines based on tenant activity that they actually can't monitor.
Mm-hmm.
Electricity bills stay in tenants' names, and the city collects less than $6 million of the $94 million assessed because over 80% challenged the actual penalties. SMUD transformed public infrastructure into a complete authoritarian surveillance state, providing government partnerships with basically corrupt institutions. They chose this kind of mass monitoring over customer privacy and police cooperation over what should be legal compliance. And October's decision that's coming up, whether utilities remain service providers or become surveillance platforms, is really important. The choice definitely defines whether the smart infrastructure serves citizens or spies on them at the end of the day. And it's something.
But it'll do both, right? Like, it'll be sold to you as a convenience, right? Oh, you forgot to turn off your lights while you were on vacation. We can give you this and you can use it. And like, we as a public are as much to blame from the fact of the matter that we do typically choose convenience over our sovereignty, right? And I think that we can, it is true that is being pushed, and that it sometimes feels overwhelming. Like, it's easy to put the blame totally and solely on governments and corporations and entities like that. But we do need to accept accountability for the fact that we do just give that up as well. And if you want change, you have to actively push against these types of things, right? Like, I don't know, spoofing the MAC address on your router to run your own router and blocking all the BS, stuff like that. Like, you have to start fighting back. And then it comes down to, then it can come down to legal disputes and etc. And then it actually gets acknowledged.
Should all be aware of and beware of. I'll see you in the next video.
So it's interesting because Swamp said, in regards to abolishing the Supreme Court, he said 100% that nobody can pack the court. And then Todd followed that up saying, ironically enough, still need the Supreme Court to balance power, which to the point of Swamp was packing of the court imbalances the power. So some good discussion going on in chat. Thanks, guys. Now, Console said the best thing in the U.S. is body cam. I can tell you the police have destroyed my back by intent twice. So when we talk about, so if we go into surveillance of government officials is a yes, because they need to be held accountable. And whenever you become an employee of a government entity, whether that be, military or basically I think it is safe to say you then become a ward of the state and you are no longer a sovereign citizen, right? You need to retire from that position, and you need to be held accountable by the people, by the sovereign citizens, when you are serving in that role. So I don't think that body cams on police officers equate to the surveillance of private citizens with smart meters, right? I don't think that those, and that's the reasoning why, right? You give up your sovereign citizen rights when you are enacting a role as a government official or an authority official, right? For in that particular case. The U.S. Constitution also spells out the creation and operation of the judicial system, which includes interpreting the ambiguous laws Congress pass, says Stand. Anyways, interesting video. I think it is important to talk about these things, so I wanted to play it for y'all. I am going to peace out. Looks like I got some groceries here to carry in too. And then I'll be live on twitch.tv/blindrun. Either going to be checking out the Battlefield 6 campaign, or I'm going to be playing some more Dune Awakening here in a little bit. But thanks everybody for watching the stream today. I'll be live again tomorrow with some more crypto news. If there's something you'd like me to cover, please shoot it on over to Twitter or X at Son of a Tech, and I'll be happy to check it out. I'll see you guys next Tuesday.